Hey everybody, welcome to the Chinchilla Pickin' Podcast. It is August 30th, 2021, Monday. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm here with Brandon Beaver. Brandon, how are you doing?
I'm good. I was listening to some other stocks podcasts the other day, and there was so much fluff, so much talking at the beginning. Like the first 20 minutes was just like talking about things I didn't care about, and I hate fluff. So we can just get right to it if you want to.
I like a minute or two of fluff.
Okay.
You're right. We don't need 20 minutes of fluff. But a minute or two to break the ice, kind of get the conversation rolling. You know what I mean?
It was my whole drive home from work. I was trying to listen to like a particular situation with a company, and I didn't even get to it.
Just too much fluff. All right, fine. We'll get right to it, guys. Rules. Here's all the rules. Brandon and I get together about 5-10 minutes before the show. We do not discuss what we're going to talk about. We just tell the other person what we're going to talk about, so you hear the live interaction right here on the show. Tonight, Brandon is going to go first. Brandon, take us away. Ignore the fluff and get right to it.
All right. So you see the American markets, and they seem to be pretty overvalued. There's still some pockets of value. We've mentioned a lot of the companies that I think are valuable right now in this particular market. But there's still a lot of people that are looking into emerging markets for their next stock trade or investment. And you have to be careful because we're going to start entering into a situation here in the United States where interest rates are going to start to rise. I hope the Fed starts raising rates. I think we need it. But it's going to happen, and the market's going to start looking into the situation and start revaluing stocks before it happens. So emerging markets are one of the first sectors of the market to get hit because the companies have not matured, the economies have not matured, so they haven't necessarily grown into their valuations. Now, South Korea is actually still considered an emerging market, which quite frankly I don't understand. They're one of the richest economies in the world. They've got a burgeoning middle class. They've got, I think it's like $45,000 per capita per person on average is the income there. So to me, they're not really emerging. They've already emerged. But
I would nowhere near call South Korea an emerging market.
Yeah,
at all.
But they're still grouped into that. So if we get a situation where interest rates start to rise, they may fall in sympathy. The South Korean stocks may fall in sympathy, but I'm always a fan of picking a value company and just letting it sit in your portfolio until it meets its valuation and goes above and beyond. Warren Buffett has said that he holds his stocks to a fault, but that's his competitive advantage. Basically, he just holds it until it's overvalued, right? And SK Telecom, they have a price-to-book value. This is the company that I was looking at. Price-to-book value under 1. And now, if you're looking at these emerging market situations, a lot of people have been looking at Alibaba, Tencent, Baidu. We've talked about them on the show. I'm still bullish on them right now. But if you want to own an Asia-Pacific stock that has its government's backing, look no further than SK Telecom. In May, it was reported that South Korea will spend $451 billion on domestic semiconductor production over the next decade, and this under-the-radar company fits that bill. Samsung Electronics and SK Hynix, which is owned by SK Telecom, will lead the investment. And this will be a national blueprint devised by President Moon Jae-in's administration along with 151 other companies. Go ahead, Dave.
Where are they getting their chips? What company is going to be producing those semiconductors for them?
Well, SK Telecom actually produces them. I'm sure there's other.
Really?
But they do. They produce semiconductors now. And this is, we're going to get to this. This actually falls into how these two companies are going to split off between SK Telecom, which will still own the mobile and broadband section, and then what was initially called SKT Investments, which is like the deep internet, the deep technology, which would be like the metaverse and stuff like that, and semiconductors will be. They're actually now called SK Square. Initially, it was SKT Investments. Now they've said it's going to be SK Square, and they're going to split into two companies, and I can talk about that in a little bit. But yes, they produce microchips. They're one of the world's leading microchip producers now. Actually,
I would have thought being in South Korea, they would have partnered with Samsung a little bit more and worked with them. And I mean, does Samsung have any play at all in this?
They do. Samsung does have a play in it. They're actually one of the leaders in this initiative as well, along with SK Telecom.
Okay, all right.
Now, SK Telecom was South Korea's first wireless operator. And if you look at their numbers, they have only 31 million wireless customers. So you're not seeing the kind of Alibaba or Baidu growth. But what you want to look at is how much of that market do they own in South Korea, because it's a smaller country, you know. This is a 45% market share. So they've got a pretty decent moat there, in my opinion, as far as like how many people are customers of SK Telecom. They've made a number of investments in other countries and industries over the years. The best one, in my opinion, and the numbers don't lie here, it was SK Hynix. They made an investment initially of $3.1 billion in February of 2012. This has increased in value over 5 times. SK Hynix is now the world's second largest memory chip maker. So it's the second. I was saying it was top 5, but it's the second one. Yeah, I see it here in my notes now.
I mean, you keep saying this is a telecom company, but I see you making money in chips here, you know, and investing in chips and, you know, overseas investments in chips. And I'm like, where's the telecom part coming in here?
So second...
Or is that like just their cash base where they produce the cash and then they use that cash to fund all these other ventures?
That is basically what's happening right now, yes. So they're the second largest memory chip maker. They're the third largest semiconductor company in the world. In June...
That's pretty impressive.
Yeah, I like it. In June, the board had decided to split the company into SK Telecom, and initially SKT Investments is what the second company was going to be called. It will now be called SK Square. SK Telecom includes the telecom business, mobile and broadband. SK Square will include e-commerce, IT security, deep tech like the metaverse and platforms, semiconductors, and more. They are pursuing separate IPOs of ADT Caps, which is their IT security brand, and One Store, which is their App Store brand. One Store has secured a $644.07 million pre-IPO valuation. SKT, or SK Square now, owns 50.1% of One Store. The spin-off is now expected to occur on the 1st of November, if it gets approved by shareholders. The spin-off ratio here, you're going to get about, so if you own SK Telecom, about 61% of your investment will then go back to SK Telecom, and then another 40% of your investment will be based on, the new stock of SK Square. So you're going to see another company in your portfolio called SK Square. On June 10th, here's the timeline here. June 10th, the board passed the resolution for the spinoff plan approval. They had a shareholders meeting about this on July 16th. On October 12th, there will be a shareholders meeting where they vote on this. From October 26th to November 26th, there's going to be a complete trading halt. And then they're going to look at the record date as far as who owns what, as far as shareholders go. And they're going to consider who owns what, basically. And they're going to decide the allotment of shares at that point on October 29th. November 1st will be the effective date for the spinoff. On November 29th, you're going to see the new shares in your portfolio.
Are they going to be equal amounts? Like, so here's the concept. We really speak in our podcasts, in our Instagram, and all of our social media to retail investors, right?
Right.
So our listeners, our people who follow us, are going to want to say they have $1,000 in this company, right?
Mm-hmm.
October 26th or 29th, and they pause it. Now, when it goes back live on November 29th, let's say they do a 40-60 split. So 60. Now, do I have $600 in this and 400 in that, or do I lose some money somewhere because of an uneven stock environment? Like they can't make the shares equal out perfect numbers.
The ratio isn't exactly 61%. It's 60.73625.
Yeah, I was just doing it for math purposes.
But you're no. I mean, I would assume that what the rest that you'll get will be like cash. I really doubt that shareholders are going to vote to approve this if they're going to lose any money on it. You know what I mean?
Yeah, if there's a chance.
Yeah.
But that's basically how it will break down, and then that's what. Now, having said that, and you're talking about these different companies, and you just now listed off all the different things that they go into it and what they own, and I appreciate that. That's quite a hefty bunch. I was trying to listen. I was trying to take it all in, and it sounds. I mean, are you saying that this is a good investment ahead of the split?
Yes. I think so. Now you have risks in that, like, maybe SK Square doesn't become valued at the end of all this the way that we think that it will. But I think this was a great idea for them to split this off, because telecom and tech, they're the same. They're in the tech sector, but they are viewed differently. They're valued differently, and now you can choose which portion of this company you want to put your money into. Do you want the growth, or do you want the old head telecom style investing?
The growth, are you looking more at the growth on the semiconductor or the one source, one page or something?
The growth would come. I mean, that's a portion of it. The one store IPO, because SK Square owns 50.1% of it, so they'll benefit greatly if the IPO goes very well. Actually, my attention right now is more focused on the metaverse portion of this, which is really exciting to me. We've talked about this.
Can you explain the metaverse to everyone here listening?
It is a internet.
In a layman's, explain it like you're talking to a child.
Pretend you live in the internet. Mark Zuckerberg was really excited about this. Now, what got my attention actually is I like the numbers. I do a stock screen on TD Ameritrade a lot. That amongst other things, I'm looking for price to book value under 1 because I want value right now, right? And as well as gross profit margin. And this company has a price to book value. Actually, it's 0.81 right now, and the gross profit margin clocked in 62.76%. So really nice, profitable company. Return on equity is around 7.54. So that could be a lot better. But the rest of this is good for me. And that's what initially caught my attention. That I was listening into the conference call, and the one of the conference call hosts mentioned the metaverse, and I was like, oh, now you've definitely got my attention. And so I did more research and discovered all these things that are happening, and that's what brought us here.
Here's my question to all these metaverses coming out. It would be more beneficial if there was one big giant metaverse and they were able to link different things.
I think that's what's going to happen. I think that's where we're going to be heading towards.
I don't know, but it seems like everyone's going to create their own metaverse, and you have to sign up for that one.
Yeah, I mean, I know Mark Zuckerberg is wanting everybody to get together and collaborate for this new. And I think it's actually going to be much more beneficial if people do collaborate. But with this company...
Yeah, I saw a lot more of his collaborative and working apps in the Oculus VR system. He has definitely pushed a lot of those out there.
Yeah.
Oculus is really pushing that and trying to push that, hey, you could use this Oculus VR for working from home and collaborating and sharing files and doing this and doing that. And I get that part of of the verse, and that's his
That's what.
first step in. But
So
I think it'd be beneficial for Zuckerberg to team up with Alibaba and Alibaba with him and create
SK Telecom,
one big place.
Yeah. I mean, just speaking of the sharing of files and stuff like that, in July, SK Telecom launched IFLand, which is a new metaverse platform that can make countless possibilities a reality. This, by the way, I'm quoting directly. I'm probably going to pronounce this wrong. Pung Young Yoon, the CFO of SK Telecom. This is what he said. In July, they launched IFLand. It's a new metaverse platform that can make countless possibilities a reality. On the IFLand app, you can easily create a metaverse room using avatars. And in the metaverse room, you can have an audio chat with up to 130 people, and you can share files and documents with them. And he said this, in the era of 5G and contactless communications, the platform is expected to be used for diverse purposes, including business meetings, events with many participants, knowledge sharing, and social networking. They plan to grow this as a popular metaverse platform, and we ask for your interest and support. Those are his words. So I think...
You know what this makes me think, Brandon? And what I should do? I should go into one of Zuckerberg's apps, because I have the VR systems capable, and I should start talking about stocks in one of these rooms.
Yeah, we should. Well, I mean, just think about the past possibilities for, people like us. We run the Chinchilla Picking podcast, but if we could somehow start a metaverse app where you have not in person, but almost in person conversations with professional traders and professional investors, and maybe even people from institutions. That would be cool.
That would be cool, yeah. I like it.
So we've got the catalyst of the spinoff. We've got the catalyst of the metaverse. And then here's another catalyst, and we've been talking about 5G for a very long time. At the end of June, the number of 5G subscribers reached 7.7 million, representing more than 30% of the handset subscribers and contributing to sustained revenue growth. Now, 30%, that's good, but there's a lot more to go here, right? Now you're saying 70% of these people don't have 5G yet. So there's still a large customer base that needs to convert and buy new phones and spend more money. So I think that's another opportunity for them, but it's a good thing.
I mean, yes. It would be good to upgrade to 5G, but, a lot of people like me, in, my age group and generation, we are over the trying to impress people with our phone thing, and we don't really care. My phone works. It's good. It's not cracked. It runs. It was top of the line when I got it, so it's not like it's completely obsolete. But I mean,
quick. You want fast processors on your cell phones. People do, and now you're watching. You're streaming videos. They buy
Samsungs.
You're streaming Hulu. You're Netflixing on your phone. I watch CNBC and Bloomberg on my breaks on my phone, so it's really good to have good video quality and not freezing and not losing service. And it is actually really, it's funny because at my day job, there used to be a section, a whole half of the place where I couldn't get any service on my phone, and now I have service everywhere. Because I think it's because of the 5G thing. Maybe it's not. Maybe it's the processor. I don't know, but
it's because you got a phone that is not over 10 years old.
Yeah, that's true. That's true. Now, because I did have a 10-year-old one.
I talk about my phone being a little bit old. Your phone outdated mine by
It was a 7. It was a 7. Was it old? I don't know how old it was.
Yeah, that was old, dude.
Yeah.
That was old.
Okay, so we've talked about the catalyst. We've talked about the rewards here with every stock. There's a risk, and there's a reason for why you've seen this stock come down 15% in the past 3 months, and I think it's been an overreaction. And the reason was that earnings growth decelerated. Now, they're still growing earnings, but it's decelerated coming out of the pandemic. So they're starting to see that, maybe we've seen the peak of this company. I don't think that's true, but I think they've driven the price down to the point where now it's value. You can buy it, you can hold it, let it sit there and let it grow. But that was a risk, decelerating earnings growth. South Korea became the first major Asian economy to raise interest rates since the coronavirus pandemic began. The Bank of Korea, they've increased their base rate from a record low of 0.5 to 0.75%. They're still sitting at 0.75%, which is very low. But the reason why they did this, they had record amounts of household debt and record home prices at the same point. These home prices and debt soared in recent months. They're trying to bring that back. They're trying to pull the purse strings a little bit back on an economy that has been very hot. Now, tech stocks usually underperform when interest rates rise. So if people look at this as a tech stock, they group it in with the rest of these companies that have PE ratios of above 40 or 50, then this may still come down a little bit in sympathy. I don't think it will. I think what you're going to see is, I think you're going to see this outperform the market in South Korea and outperform the market in the United States. But there's always the risk that I'm wrong. The tech sector, by the way, the tech sector has a total debt to equity in the United States of 17.68%, which is really, really high. If you're looking at a company that has a debt to equity of over 2, you're usually seeing a company that's going to have some problems in the future. South Korea Telecom has 0.94, which is really, really good.
Finally, I never thought you would give me a break here to get a word in.
Well,
bro.
let me
You're on
just
a roll there. So, look, I like this play, but I don't like the telecom part. I wanted the split, and I want to buy the square.
So do I.
Buy the telecom.
But I'm going to hold
the
it.
Telecom, I'm over it. It's a good company. Don't get me wrong. They're strong, but they're not growing in other countries. I like the square part. I like those options of the company. I like the semiconductor especially. Right now, there's still a shortage of semiconductors. There's going to be a shortage for the next couple of years. I like the semiconductor play, especially if they branch out, start selling outside. Their partnerships with Samsung right there in the same country as them. I mean, come on.
Yeah.
You got a great global company right there. You can partner with them, and you can really push this thing out global. I like their partnerships. The metaverse, yes, we're all going to be moving to the metaverse, but how soon, how quickly do we get there? Do we get there before Elon Musk gets us to Mars? I don't know.
Well, you know what? Like I said, we're looking at a situation where the debt to equity of tech in the United States 17.68%. That's going to be a real problem when interest rates start to rise. I think the QQQ will underperform in that situation. People have been looking at Apple and Microsoft, which those are good companies, but also Amazon and other tech plays have been their kind of go-to for bonds, right? Like they've been saying like, okay, these are bond equivalents. They're really not, and I think that attitude is going to change when interest rates start to rise. But like I said, if you drill down into the telecommunications sector, we have a debt to equity of 1.28, and SK Telecom has 0.94, and that's much better. And it's really surprising to me now that the telecommunications sector has only a debt to equity of 1.28, because traditionally in the past it's been much higher. Go ahead.
In the past, it has been much higher. You are correct on that. I'll give you that. No, yeah, I agree with everything. You sold me on the spin-off, the square.
Yes.
I'm still, like you said, I'm not buying the telecom. I believe that's just their cash cow that they use to fund how they really want to grow the company.
Well, for me, it depends. Like, at the end of the split, what is the PE ratio of the telecom company, and does the price to book value remain under 1? If it remains under 1, I'll buy it because it's cheap enough.
Well, look at this. Solar City and Tesla were two different companies at one given time. Solar City became profitable. Solar City became under Tesla and is now part of the Tesla umbrella. And that, a lot of critics say that is, how Musk really shored up the finances of Tesla by bringing in Solar City under Tesla. And instead of two companies, I mean, he owned them both, but instead of two different companies, he combined them into one.
Yeah.
You might see that later on after the split, years from now, they might combine back into one.
Potentially. I think right now it's a good thing.
Are you complete on your telecom thing here? Because you mentioned a couple things I want to.
Yeah, I think that like You're talking about the telecom business. I think that's probably one of the things that's been holding the value down and why people haven't been buying into it so much. But they spin these off. I think SK Square becomes it gets a lot better of a valuation.
Yes,
because people start looking. The growth investors will pile into it.
Yeah, and that's why people would buy ahead of the split in order to get money into that before it comes and spins off. It's like buying an IPO before it IPOs.
Yep.
That would be that. I mean, and that's what you're talking about. So that's why people would put money into SK Telecom now ahead of this.
Mm-hmm.
And I get that. I don't know. I would wait for the split. Personally, I'm not going to put money in ahead of time. But you did mention something about debt to equity and the concern right now. And that's why I was asking if you're done with the SK Telecom, because this actually goes into one of my points, if you don't mind me jumping in here. If you don't mind, I want to talk a little bit about Amazon and their new buy now, pay later system, right?
Yeah.
And you're going to see where I get back to debt to equity here in a minute. I got to work my way back there. So Affirm is a company that does these type of layaway, if you will, purchases, or like rent to own purchases. You get the table now, you make some payments, and then you end up owning the whole thing after 6 to 9 months, 12 months, what have you. I'm sure some people have got those Finger Hut magazines from time to time over the years. Same type of deal, right?
Mm-hmm.
That's what kind of Affirm does, right? So Affirm, it was announced today that Amazon is going to be using the company Affirm to go ahead and run this buy now, pay later option on the Amazon shopping. And so you can make big purchases like, giant TVs or something, or big couches or sofas, and you could do the buy now, pay later. So Affirm jumps 46% today, jumped $31 up to $99. There was calls out saying it's going to hit 120, 130. I'm sure, Wall Street bets, people are jumping on that. They're jumping on GSAT as well today, but we'll get into GSAT later on if we have time. But right now, Affirm, right?
Yeah.
Amazon and Affirm jumped up. It's going to go a little bit higher before it comes back down, then builds back up and settles finally. But my concern is what we're seeing here is that Amazon feels it has to do this for its consumers, right?
Mm-hmm.
Here's my concern. You're talking about companies having a high debt to equity ratio, and if we go into a correction or maybe higher interest rates, that might hurt a lot of these companies. My concern is with the consumers. Are the consumers now getting back to a 2007 to where they're overextended, where I got 2 to 3 mortgages, but I got this nice truck, and nice second home or a summer vacation house or something that I can't really afford. I really wanted that lake house. I saw Bill down the street had the lake house, and now I want it. Are consumers being overextended again? And that's why the Amazon feels it has to offer this.
Probably. I don't actually know the household debt numbers right now, but I know they've gone up. So,
right,
it's gone up. I mean, just the amount of
you brought up a concern over debt to equity if interest rates rise on companies. Well, if interest rates rise on companies and debt to equity, they have to pass it on to consumer, and the consumer is overextended. Then they have to default on some of these loans and let them slide and let them go.
Yeah, just like
and they're going to let the boat go. They're going to let the second home go. You're going to see some of the small things at first, but then it's going to roll into other things.
Yeah, if people are,
you already see. I mean, sorry, I don't mean to keep.
No, you're fine.
You already see people who, let's say, and I'll give this car example. This is a true thing that has been true for two to 3 years now, and the car automakers will tell you. Let's say I have a brand new Jeep Cherokee and I drive it for a year, right? And I'm like, I don't really like it no more. I want to go get something else, right? So I take it in. They say, well, you owe $30,000 on it, but it's only worth $25,000. But don't worry, we'll give you that other $5,000, and then we'll get you on a new loan now. So now they take out that $5,000 on top of whatever new car. So they get another car that's worth $30,000, but they actually have a loan for $35,000 because they owed a $5,000 difference on the last one.
Right.
So now they have car loans owing more money than what the actual car was worth brand new.
Yep.
And this is an actual thing that's going on in America, and I'm worried that our consumers are getting overextended.
And then, of course, you drive off. Once you drive the new car off the lot, the second you do it, it loses 50% of its value. So you've immediately made a bad investment.
On the make and model, but I mean, come on.
Yeah.
It's the point I'm making is that you brought up a concern over companies. I'm like, I got a concern over consumers.
Yeah, me too. I mean, it's just like one of the reasons why we get concerned about these companies with high debt to equity ratios. If they're financing their business with debt and then debt becomes more expensive, then that's going to be a huge problem for them. It's the same way with consumers. If people are financing their lives with debt and credit cards and things like that, and those interest rates go up, it's going to pinch them really, really hard.
Yeah, I mean, the shoe has to fall eventually.
Yeah.
You either gotta cut out that lifestyle and pay everything off, or you're just gonna lose everything. It's one or the other.
Yep.
Or somehow you win the lottery and then you got lucky. I mean, come on. I mean, I don't know. That was my concern when I saw the Affirm go across that news article go across with Amazon today. I was really more concerned about the consumer and why Amazon felt it had to do that. I get them announcing this before Christmas because they want people to get online now. Oh, yeah, I can make that big purchase and get it here for Christmas and still do all my holiday shopping.
Yeah, they'll spend more.
And you're right, and spend more and get my Affirm to pay for it, And
Yep.
so that's what Amazon's going to do. And so Amazon's going to have a great Christmas. So, yeah, you buy Amazon. Who wouldn't buy Amazon right now? You're going to have a great Christmas.
I mean, you know what? One of the I like what Amazon. I like the stock movement right now on Amazon. I have been concerned about Amazon with a rising interest rate environment because the earnings per share don't really, in my opinion, add up to being beneficial over the long term in a rising share or rising interest rate environment. The math doesn't make sense if you bought it earlier this year, but sometimes instead of company stocks crashing or dropping, they will sit and consolidate and wait for earnings to grow into the valuation, and that's what Amazon's been doing. And I do think that it's not a bad idea to buy Amazon right now. You can hold it and you'll be fine over the long term. You may see some short-term drops in that stock, or maybe it'll continue to consolidate as we start thinking about rising interest rates and tapering and all of that stuff. But it's been just kind of flat all year, and that's not a bad thing because that's just investors waiting for earnings to catch up to where it's at.
Yeah. No, I agree. I agree for the most part. I do see a lot of a future with Amazon, especially in the space, Blue Origins.
Yeah.
And that area there.
Oh, yeah, definitely. With
me, I'm big on let's get to space. Let's start colonizing Mars. Let's start terraforming. Let's do it now. It's not a sky high valuation on Amazon right now either. It's not like it's super bubblish. No. I mean, it's the second biggest retailer in the United States.
Yeah.
So I mean, it's got every right to be where it's at,
Mm-hmm.
And now with the first biggest retailer having a layaway system, and the second biggest retailer having a layaway like system, well, buy now, pay later, rent to own type thing. I mean, you see this in the retailers that this is something that the American economy consumers are gonna consistently need and use because we overextend. We live a life that we can't afford.
Yeah, it sucks. But, it's Fed-driven. People don't talk about that, but it is. Yeah. That's why they want the interest rates to go down, because they want people to spend. They think the economy is driven by spending. They think that savings hurts the economy, which it doesn't. But that's what they think. That's their mindset.
Yeah. And we need a bigger savings account, all of us. Brent, did you have anything more? Because I cut you off.
No, I'm good. That was everything I had. I just was doing this profile on SK Telecom. That's what I had for the episode. So,
gotcha. All right, guys. I got a couple different things. It's kind of going to be like a lightning round here real quick. These are like 2-3 minute things, but I do want to mention them. Get them out to you guys. These are things to think about as far as like, can you trade this? Can you not trade this? Is there more room for a firm? I don't know where a firm's at right now. Last time I saw it was at 99.36. Will it hit 120?
Don't chase it.
At 100. There was resistance at 100. People are calling 120 all over the board because of this whole Amazon thing. It'll probably hit 120. Wall Street Bets is probably all over it, pushing that higher. Another quick one. Go ahead, Brandon.
Do you think maybe like a short-term options play or something? I don't think you buy for the long haul here. I think you buy for a trade.
Not at all. 100% agree. You do not buy this for a long haul. This is not a long investment. This is a day trade. You are in, you are out, you make your money, and you go. You do not stay in this one. I won't stay in this one. I'm not going to call staying in this one.
Yeah.
Another one, Wall Street Bets is probably all over it and is definitely looking at is GSAT. The reason why GSAT is jumping today is because Apple is saying that on their newer phones, you're going to be able to use satellite for their text messaging and phone calls. So you no longer will need a telecom. You will not need T-Mobile, Verizon, or AT&T for that. But you will need it for data. So you can't quite get away just yet, but you can make phone calls and text messages via satellites without a major telecom communicator. So that might be a way to cut the cord on your data on Facebook and social media. And if you want to get rid of all that stuff but still be connected, maybe get an iPhone and just don't hook it up.
Maybe that's why SK Telecom's doing the spinoff.
It could be. So, I mean, GSAT's jumping up, and it's a penny stock, and so I know for a fact that Wall Street Bet guys are going to pile in this, drive it higher. Again, day trade, don't buy it for an investment. Day trade in and out. Be careful when you buy. Wait for the dips. Watch it. Look at the news that's going on. If it just gapped up a big bunch, it's probably going to come back down a little bit before it jumps up again.
Yeah, there's
the gaps.
There's no guarantee that Apple's going to use GSAT. They're famous for doing their own stuff, building their own things that they use.
Yep. So, no. They came out and said that they are going to use GSAT's one of them.
Oh, really?
Other satellites. Yeah, other satellites, not their own. So, I mean, me, Mr. Day Trade, got another date. I keep going. This is like, there was one day trade with Firm. You got another day trade GSAT. Here we go. Coinbase back in the news. Going over the highlights here. Coinbase security issues are still existing with this. I mentioned I loved Coinbase. I love it as a long-term investment, right? But my concern back in the day, if you go back to our podcast, 5 months ago, something like that. Feels forever that we've been doing these. But 5 months ago, you go back and you can see my concern was with the security of all these cryptocurrency exchanges. I mentioned that they've been hacked in the past. I remember Mt. Gox, that big hack that happened there, where we lost tens of millions of dollars worth of value just went away. That someone hacked them and got them. They're probably the guys buying up the NFTs right now. Who knows? But Coinbase sent out an email to millions of users today saying that there's security issues and they need to check their accounts. There was no security issues and they need to check their account, but they just accidentally sent out the email. That doesn't look good for a company that we already had security concerns about. You know what I mean? Yeah. It's like, Coinbase, you were hacked years ago. We thought you got it together. Now you're not making us feel safe when you send out this email today. And you're like, hey, psych, nothing went wrong. That's going to be down. That's going to have some major headwind into it. I don't believe crypto's going away, but they gotta eventually get their stuff together because it's just one mess after another mess, and it's manipulation after manipulation. You got Elon Musk getting on there tweeting about Dogecoin and all this. It's just if you're gonna buy Bitcoin or one of the cryptocurrencies, you need to buy it for a long-term investment. So you need to pick and choose a cryptocurrency that has a long-term value that people will be using. So things like Dogecoin, I can't see it because they produce more every year. So it devalues itself every year. And so that's why I'm not a big fan of that. And plus, the major holders of Dogecoin could dump their shares, dump their coins very quickly and just devalue that coin in a matter of seconds. So again, I'm not a big buyer of Dogecoin. I wouldn't do it. I do have some Bitcoin investments, but that's a long term. Like I've said, it's years is where I see the hold at and see some results from that.
Well, we went through that crypto bubble kind of earlier this year. It was a small one, but Bitcoin's recovered. I'm still a Bitcoin bull long term as well.
Yeah.
People want currency that's not manipulated, that some central planner's not trying to manipulate for their own benefit or for their friends and the bank's benefit. They want some stability. So I want to see Bitcoin stabilize, and I think it will over the long term. It's still new. I mean, it's been around for 11 years, but that in the history of currency and industry and tech and all of that, that's still new.
Yeah.
So it's still got to mature, but it will. I think it will.
Yeah, and it will stabilize. I think the problem is people are upset with Bitcoin is when it dropped down to 30 and they sold, but then it dropped back up to 40 and now they're buying again at 40 and they're upset. I'm like, you shouldn't have sold.
I know.
You should have bought it for a long-term investment and trusted your reasoning for buying it.
Buy high, sell low, right?
Right.
No.
So we're gonna call this section the lightning round, Dave, because I got one last thing here.
Buy.
Yeah, no. Coinbase, no. Not right now. They got to work out some kinks. All right. One last thing. We talked about this ahead of time, Brandon, you and I, but it was the SEC chair, Gary Gensler, saying that, quote unquote, it is on the table that he might go ahead and put a pause on payment for order flow. He's going to pause that practice of payment for order flow. So what that means is, let me explain this now. I know most people understand this, most traders understand this, but I wish I want to explain it just in case someone doesn't understand it. What that means is that's the majority of way that people that trading platforms make their money if they don't charge a commission. So there's a possibility if they do ban that those trading platforms will have to start charging a commission again. Brandon and I remember those days. I remember using Scott Trade at $7 a trade was the cheapest one out there. And so it's I remember those days. We might be getting back there, we might not.
Well, if it was $7 to buy, $7 to sell. And if you didn't have $5,000 to buy stocks, it didn't make any sense to buy stocks because you couldn't make the math work. So it was a huge barrier to entry for a lot of people. And
it was, but it also made you save up your money, and you had thousands to begin with. So you didn't just jump in there with like $500 and think, I don't care if I lose this. Let me be crazy with it. And then you lose it and you say, well, the stock market doesn't work and stock trading doesn't work because it didn't work for me.
I never have any confidence in these people, and I've never had the illusion that they have my best interest at heart, because I've never seen that actually be true. And I think there's a lot of big institutions that are still upset over the crash that happened earlier this year on margin. Do you know what I'm talking about? I forget what was the call of it. Yeah, the GameStop thing, the Bath and Body Works or whatever, Bed Bath and Beyond, all in AMC. I think they're still upset over that. They're still upset over the fact that retail traders beat them to the airlines last year, and they've got way more influence over the SEC than either you or I even know. So I think that has more to do with it, trying to keep people out, than it is actually trying to help people.
Yep.
It's sad.
Yeah, and so because of this, again, I didn't think Robinhood was a buy. We day traded it. I've day traded it. But if you're looking for an investment, I'm thinking it's a sell. I think you short the stock.
Yeah.
If you want an investment, short it. Short Hood, because it's going to negatively affect it. This is how they get majority of their income. Hood's going to drop tremendously if it goes through.
It might be time to start thinking about taking your money out of it. I don't know.
If you have money in Hood, yeah.
Yeah.
I don't. I've day traded Hood, so I was in and out in less than 24
Well,
hours.
I mean, as far as like actually having your money on the trading.
Oh, really?
Platform.
Just taking the money out of the trading platform altogether?
What happens if they can't adapt their business, and if their business is affected, then what happens to your money?
It's true.
Is it FDIC insured? I don't think it is.
No, it's not.
I'm not
it's
trying
not
to
it, no.
spread false information. I'm telling you, like, I don't know, but yeah, I don't think it is. So that's worrisome for all markets, not just for Robinhood investors, but for all markets.
Yep. All right, guys. I hope you got to see two different ways of trading and investing here. You see Brandon's approach. He's very methodical, does a lot of research. He goes through it. He actually has very, very good points. Brandon's an incredibly smart individual.
Thank you.
He has a lot of good points. He does all this in-depth research, whereas you see me, I list off a bunch of headlines. I show you what I'm thinking, and I do the macro, quick, day trading investments, and this is where I make my money. And you see two different styles here, but this is how we do it, and this is why we give you both styles in this one podcast. And I show you how I'm looking at things. He shows you how he looks at things. And please, if you have questions, DM us on Instagram, reach out to us on StockTwits, send us an email, Brandon Beaver at chinchillapicking.com. Send him an email. He loves emails. Ask us questions, guys. We're here to help. This is what we got. Final thoughts, Brandon?
You want to talk about how you're making me Jingle Bell Run or whatever it's called?
Yes. Oh, hey, yes. Thank you. Let me do some promotion here, guys. So every year I do the Jingle Bell Run for Arthritis Foundation. And if you live in the Cincinnati, Ohio area, please reach out to us. And we would love for you to be a part of our team. We are sponsoring the team, which means we will pay for your fees for the run. It will be on the Chinchilla Pick, and we'll pay for it all. You get your fees, Jingle Bell Run. You get there, they give lots of giveaways. You would leave with a bag full of giveaways. You'll leave with the Jingle Bell Run t-shirt. You'll leave with the Chinchilla Pickin' t-shirt. And you'll get to meet Dave and Brandon, get to ask us lots of questions and interrogate us.
You'll also see me very miserable in an environment that I'm not used to. I only run when something bigger than me is chasing me.
I will chase you. How about that?
I hope you're not sensitive to cuss words and a red-faced Brandon coughing. Go. And do we get smoke breaks?
No, Brandon, you can walk with the walkers in the back.
Okay. I might need a walker. An actual walker.
For you at the finish line. But yes, please, guys, seriously, reach out. It is on us. We are sponsoring a team. Everybody will get a Chinchilla Pickin' t-shirt and a Jingle Bell Run t-shirt. So please, I appreciate it. Thank you, Brandon. Thank you for bringing that up.
No problem.
That's all I got, Brandon. Anything you want to leave the people with?
That's all I got.
Awesome, man. Well, we hope you've been entertaining, educational, uplifting, because we want everyone to make money. You guys have a good night.
Have a good night.